Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a fantastic weekend. We're going to start off as we always do by having a quick review of the key events heading into next week, and this is going to be very important this morning because we have a number of interest rate decisions. We have FOMC next week, and a number of pieces of data which came out last week can give us an indication of what's likely to happen in all probability next week in a couple of these interest rate decisions. So the economic data today is going to be very important to look at. We're then going to have a look at the scorecards for the currencies going into next week before moving on to the individual currency analysis. And once we've analysed the currencies individually, we're going to move on to the currency pair selection where we match up the strongest and the weakest currencies, finding the best pairs for next week. And as always, we're going to finish by looking at stocks, gold, silver and Bitcoin. Okay, so let's have a quick look at the economic calendar. And we're starting off here by looking at some of the events from last week because these are important. We did have an interest rate decision out of Australia and the interest rate remained unchanged. We also had an interest rate decision out of Canada, and again, the interest rate decision remained unchanged. If we go and have a quick look at the statements from the RBA, you can see the RBA, the board is committed to maintain highly supportive monetary conditions. And this means that they're not going to be taking their foot off of the pedal of loose monetary policy. So fundamentally, you still have that bearish outlook for the Australian dollar. And this is the same for the Canadian dollar as well. You can see when we go and look at the rate statement out of Canada, the economy continues to require a considerable amount of monetary policy support. So fundamentally, we're not talking about the short-term technicals here, but fundamentally, these are bearish rate statements for these currencies, as both the Reserve Bank of Canada and the Reserve Bank of Australia are signaling their intent to continue with loose monetary policy conditions. So ideally, when we go through the currencies over the next few months, we always want to be looking out, especially for those trades in the Australian dollar and the Canadian dollar, which are in line with these policies from the reserve banks of these respective currencies. Now, going into next week, we do have a number of very important data coming out as well. The key pieces of data we need to pay attention to going into next week are, first and foremost, we have some pound CPI data, but the overriding pieces of data from next week are going to be the FOMC, which comes out on Wednesday. This is extremely important because, of course, the dollar as the world reserve currency dictates the direction of most of the other currencies, the commodities, etc. So FOMC really is the big one going into next week, but you can also see next week we have GDP out of New Zealand, we have some employment data out of Australia, but more importantly, you can see we have more interest rate decisions down here out of the UK, we have an interest rate decision out of Europe, and we also have an interest rate decision out of Switzerland. So the first thing to note is there's a lot going on next week. There will be trading opportunities, but it is not a week to go gung-ho with taking risk and take lots of positions because the markets are likely to get very volatile. And any positions you do take, if you want to get involved, for example, in a pound pair before the interest rate decision on Thursday, because it's quite late in the week, and we're going to be discussing in a moment what the outcome of that interest rate decision is likely to be. But say you wanted to get involved in the pound pairs, I would really recommend taking wider stops next week because when you have these interest rate decisions, as I say, the markets can get volatile. So really not a week for taking too much risk next week, and also not a week for having very tight stops. Now, in terms of what the outcomes of some of these are likely to be, well, first and foremost, let's start with the SMB. They are locked in at minus 0.75%, and there's a very good chance we see the SMB meeting pass fairly uneventfully and that it doesn't have too much of an effect on the Swiss franc because their monetary policy statements, they're pretty stable. They're always pretty much the same. If we go and have a look at FOMC, well, the key to what the probabilities are of the outcome of FOMC next week really lies in data that we got last week. If we go and have a look, and we're looking at the investing calendar here, because there's just more data on it. But if you look from last Friday, we had out of the US CPI data year on year, so annualized, coming out at 6.8. And we also had core CPI data year on year coming out at 4.9. Now this was in line with expectations, but as you can see, this is higher than it was previously. So you still have inflation in the US going up. Well, why is this important? Well, it's important because this is going to put pressure on the Federal Reserve to strike a more hawkish tone next week. That is to say, a tone which is bullish for the US dollar. because the Federal Reserve is going to want to control that rise in inflation. It wants inflation to come down. So as it strikes a more hawkish tone, traders view the probability of a faster pace of tapering or earlier raising of interest rates as becoming a more probable scenario, and as that happens, we see the dollar rising. So going into FOMC on Wednesday, based on the inflation data we got coming out last week, and of course you never know exactly what the market's going to do on these big economic events. However, the probability is greatly weighed to the upside for the dollar based on the inflation data we got last week. So if you're going into Wednesday with a short US dollar position, in my opinion, you have a much greater chance of being on the wrong side of FOMC next Wednesday. And finally, if we go and have a look at the UK interest rate decision as well, we also had data coming out last week from the UK, and you can see there was a miss in GDP out of the UK. And again, just like with inflation, this is going to put pressure on the Bank of England next week to maintain loose monetary policy conditions. So in terms of probabilities and what's the most likely outcome for Thursday's interest rate decision out of the UK, if you have long pound positions going into Thursday, there is a higher probability that you're going to be on the wrong side of that interest rate decision. And vice versa, if you wanted to trade into these interest rate decisions, you maybe wanted to take a single position, then the probabilities are for further declines in the pound on Thursday, and the probabilities lie with an increase in the value of the dollar if the Federal Reserve strikes a more hawkish tone to try and stem that rise in inflation. So as I said, quite a lot going on next week, but it's very important to look at because the data that came out last week balances the Federal Reserve to strike a more hawkish tone, and in all probability, the Bank of England to strike a more dovish tone going into next week. So looking at the scorecards heading into next week, we can see that first thing to note is really that the dollar came down by 1 point from 2 to 1. And this is as the dollar became less volatile, started to correct more. Why? Because as we're heading into FOMC, you always see currencies lacking volatility. They tend to correct going into big interest rate decisions. So the US dollar got more corrective last week, heading into FOMC, as a lot of traders are waiting for the decision to come out on Wednesday before they allocate capital back into the dollar. And as a result of the dollar getting more corrective, we saw the euro gaining a little bit of strength. We saw the Aussie gain a little bit of strength. The New Zealand actually remains as weak as it was last week. So the first thing to take away from this is last week the markets were pretty dull, a little bit corrective, and this was because of the dollar correcting heading into FOMC. The New Zealand pairs, which saw a slight bounce last week, this is still suggesting that that's just near-term profit taking, and actually further declines are likely in the New Zealand dollar still. And we should be treating those moves last week, at least as it currently stands, as a near-term correction, not as a trend reversal. But of course, the outcome of Wednesday's FOMC is likely to dictate the direction of the dollar, and also, therefore, the euro, the Aussie, the New Zealand, etc. So if you want to take more risk for more reward and get involved in the dollar pairs before Wednesday, then it does look like an upside surprise is more likely than a downside surprise, based on what we discussed with the economic data last week. However, if you want to wait until after this data comes out for direction in the dollar, that would be a more conservative way to play FOMC heading into next week. The next thing to note is that the Swiss franc and the Japanese yen still look like the best currencies to be involved with on the long side. And we did have a bounce in the Canadian dollar, perhaps because we saw that bounce in crude oil. But when we look at the rate statement, these technicals here don't align with the overall fundamentals of the Canadian dollar. The Reserve Bank of Canada is seeking to devalue the Canadian dollar with loose monetary policy. So if we are looking for short-term opportunities, I wouldn't go too hard on long CAD positions. I would much rather see the CAD down in the weak column and be looking to short it in line with the monetary policy of the Reserve Bank of Canada. And the third and final thing to note going into this week is the big decrease in the strength of the pound. The pound actually goes into this week as the number one short. And this is because, exactly as we just discussed in the economic calendar, as we had that missing GDP, money has come out of the pound as traders and investors are anticipating the Bank of England being forced into a more dovish tone in the meeting next week. Because the chances are the Bank of England is not going to want to get hawkish into GDP misses. So to summarise then, I do like pound shorts as the best play next week. A slight fly in the ointment is of course that interest rate decision. So if you want to get involved before Thursday's decision to the short side, I wouldn't take too many pairs just in case, because as I said, with those big interest rate decisions, you never know for sure what's going to come out, but it does look like the probabilities are weighted to the downside. The US dollar is currently correcting, but it does look like it's going to continue higher, perhaps after FOMC. And outside of the interest rate decisions, the Japanese yen and the Swiss franc still look like the best currencies to be involved with on the long side. Yes, we have an interest rate decision out of the Swiss franc, but as I said, very often they pass uneventfully. So I would be very interested going into next week in pound franc to the downside, pound yen to the downside, perhaps pound CAD to the downside just because of how weak the pound is. But again, I'm not super bullish on the CAD overall. I mean, if you look at it here, you've got risk-off currency, the CAD, and then another risk-off currencies. The risk-off currencies are congregating to the top, and the CAD has kind of jumped in there. So it's not completely convincing, although going into next week in the short term, I wouldn't mind perhaps one opportunity in the CAD pairs. I am still very interested in New Zealand franc to the downside, New Zealand yen to the downside, and New Zealand dollar to the downside, perhaps after Wednesday's FOMC, just to be on the safe side. And I also like the Aussie pairs and Euro pairs to the downside against the Swiss franc, the Japanese yen, and also the dollar. But as I say, a lot will depend on the outcome of Wednesday's FOMC. Okay, so let's have a look at the individual currencies quickly. And I'm looking at this on the daily chart because I want to have a little bit of a zoomed out picture of what's going on in the individual currencies heading into next week. You can see we did have the big rally in the dollar, and now we're setting up this bull flag as over the last 1, 2, 3, 4, 5, 6, 7, almost 2 weeks now, the US dollars really has gone nowhere. It's just corrected into next week's FOMC. The technicals on this are bullish, and when you pair this with the fact that we had that rise in inflation from last week, it does look like the overriding probability is for further advances in the dollar next week, both on the technical side and on the fundamental side, where the Fed is pressured into striking a more hawkish tone in Wednesday's meeting. If we go and have a look at the euro, pretty much just the opposite of what we looked at here in the US dollar. We've had the big sell-off with momentum. When you have big sell-offs with momentum, very often technically you get followed through to the downside. Markets don't tend to have big sell-offs and then just reverse trend. They tend to correct and then they continue down, and then you can get double bottoms down in this area, inverse head and shoulder, etc. But not very often do markets just sell off in a big way with momentum, correct, and then continue to rally. I mean, sometimes it happens, but it's so rare, and we're talking about probabilities at all times here. So the overriding probability technically here is for further declines to the downside. We have the European interest rate decision next Thursday as well, but it's the Federal Reserve meeting on Wednesday which is likely to dictate the dollar and also the euro. And if that meeting is more likely to be hawkish, then of course this is weighting the probabilities to the downside in the euro next week. Next is the pound. The pound came down last week and took out the target set at 1.3180. And going into this week, it is the number one short on my watch list. I am interested in shorting pound pairs. And when we go and look at the pound pairs, we can discuss the two ways of doing that, either before or after the interest rate decision. But certainly the pound is looking like a good short, and it's probably going to be a good short over the next few weeks leading into Christmas. Next is the Swiss franc. Now the Swiss franc over the last 1, 2, 3, 4, 5 days hasn't really gone anywhere, but it is still technically bullish, and the technicals are confirming what we're seeing with the strength in the scorecard. So I am still bullish on the Swiss franc, even though we pretty much went nowhere leading into FOMC with the correction in the dollar. The Japanese yen is forming a potential inverse head and shoulders, and it is currently quite bullish. So I am bullish on the Japanese yen heading into next week still. And again, 1, 2, 3, 4, 5, you can see didn't really move very much over the last week. The Canadian dollar has bounced to the upside. Now, if we look at the technicals, this really confirms what we looked at in the scorecard as, yes, we have near-term strength in the Canadian dollar as oil bounced, but it's not a super bullish currency. I mean, technically, it's still structured to the downside. So that +2 reading in the scorecards, when we look at the individual currency, it's more telling you if you're going to take a short position, you're better off shorting Aussie and New Zealand than shorting the CAD, as opposed to telling you to go out and buy lots of CAD pairs. Does that make sense? So I would take that +2 reading, looking at the individual currency here, as being more like a don't short me sign, as opposed to go out and buy me sign. Moving on to the Australian dollar. The Australian dollar did have quite a sharp bounce, and this is exactly as you would expect the characteristics of a short covering rally to be. They're quite steep because look at the sell-off we had in the Australian dollar. I mean, markets don't move in a straight line, but between the 29th of October and the low down here, this almost is a straight line. So profit taking comes in, we saw a rally. They do get quite volatile, but as it currently stands, this looks like nothing more than a correction, and it does look like further downside in the Australian dollar over the next few weeks is the most likely outcome here. And finally, if we go and have a look at the New Zealand dollar, even last week after this big sell-off to the downside, we barely managed to correct or rally at all in the New Zealand dollar. Even as the Australian dollar bounced, the New Zealand dollar really struggled. And this just confirms the scorecards from last week. We said New Zealand was the weakest, and it was the currency which struggled to rally the most. So going into this week, I am still bearish on the New Zealand dollar. Perhaps we correct a little bit more first, but either way, it does look like further declines is likely in the New Zealand dollar. Okay, so let's move on to the currency pairs, but we're just going to start with crude oil. And you can see crude oil is still structured to the downside. This is essentially a huge bear flag, and this is just viewed as a near-term correction. And in fact, towards the end of last week, we actually confirmed a double top reversal in crude oil, breaking down below this low. And we now have a slight bear flag. This would be much better if we had more momentum breaking and confirming this. We came down and then started to correct. These are always a little bit more risky because these are almost like 1 hour charts. We're looking at this in the 4 hour, but really this is almost like a 1 hour setup. But just look out for further declines next week in crude oil because we have posted this double top and we could actually start to come down from here. So any declines would be down to the next key support at 62.23. And what this shows is, to me at least, exactly what we discussed in the scoring system, which is that +2 in the Canadian dollar is really more of a don't short me as opposed to go out and buy me. Because if crude oil starts to come down, you could very well see the Canadian dollar coming down and weakening next week. So when we look through at the Canadian dollar pairs, because in the very short term we have some strength, we're going to list them anyway. But I much prefer to be long Swiss franc, Japanese yen, and possibly even the US dollar over and above the Canadian dollar next week. So the first currency pair we're going to look at, which is my favorite currency pair now going into next week based on the scoring system, is pound franc. We did have a short near-term bounce, and that was an opportunity to short last week, although this is actually really the first week that I am interested in pound short positions. So very simply put, going into next week, what I'd like to see is any pullback in this area would be viewed as an opportunity to look for further declines down to the 1.2053. And because of the interest rate decision on Thursday, you have a couple of ways you could play this. If you want to take more risk for more reward, which is entirely up to you, any pullback in this area could be shorted before the interest rate decision, because if they strike a more dovish tone, what you're going to see is you're going to see a big sell-off like this, and then usually the market corrects somewhat, and then you get a second opportunity for follow-through like this. So I am looking further declines in these pairs. If you want to take higher risk, higher reward setups, any pullback would be a good opportunity to short heading into the interest rate decision on Thursday. But just be aware, if you are trading interest rate decisions, you need to have your stop loss out the way. Take a week or 2 weeks ATR or something. Just get your stop loss out the way because it can get very volatile and you don't want to be whipsawed with tight stop losses. If you prefer to be more conservative in your trading, then what you can do is you can wait for the interest rate decisions to come out. As I say, if the market corrects and then sells off like this, pointing you in the direction essentially of the next move, you wait for the correction and then you can look for the follow through. That would probably be next week because the actual interest rate decision is on Thursday. So there's two different ways you can play interest rate decision setups there, and this will be exactly the same for the rest of the pound pairs and also for the US dollar pairs going into next week with the interest rate decision we have on Wednesday out of the US. So next market I like going into next week is pound yen, further declines. Again, very often we correct into interest rate decisions, so I wouldn't be surprised to come up and see this almost fake and inverse head and shoulders breakout over here, and then when the interest rate decision comes out and the rate statement, we get a move to the downside like this. So again, any pullbacks in this area would be an opportunity if you are looking to take high risk reward setups and you believe you're going to see further declines from the interest rate decision to short. Again, albeit I would personally take a wider stop if you wanted to do that. Or if you want to be more conservative, wait for the interest rate decision to come out. And if you get that sell-off, you can then look for the pullback and the follow-through down to 148.16. Next is pound CAD. Now, we've already discussed the fact that the Canadian dollar, it did take out the target set from previous weeks. And it does look like we're setting up a bear flag now in pound CAD. So any continued pullback in this market would be viewed as an opportunity to look for short positions. And again, if you wanted to be more conservative, wait for that interest rate to come out. And if you get the sell-off, you can look for the pullback, and then that would be the opportunity probably heading into next week. First of all to the lows, and then down to the 1.6555. So out of all of the Canadian dollar pairs, if you did want to go long the CAD, I think pound CAD would be your best bet, purely because the pound is the weakest market going into next week. And finally, we have pound dollar. Pound dollar did take out the target set from last week. The slight problem with pound dollar is you have 2 interest rate decisions going into next week, and this means this market could get very volatile. But again, any pullback in this market would be viewed as an opportunity to look for further declines. And any sell-off to the downside, say we do get a big sell-off if the dollar rallies on Wednesday, would be viewed as the opportunity to look for a pullback and then further declines down to the 1.3080. Generally speaking, if you have 2 interest rate decisions in the same week for a currency pair, it's probably better just to let both of those interest rate decisions pass, and pound dollar may even be a play which sets up nicely next week instead of one to get involved with this week, because as I say, this could get very volatile. After the pound pairs, I do like the New Zealand pairs. And last week we were looking at further declines in the New Zealand franc. We did start to pull back, and I do have high conviction targets down here. So the scoring system, the technicals, everything tells me we're set for further declines in New Zealand Swiss franc. We are setting up for a double top here in the short term, so it wouldn't surprise me if we broke this to see New Zealand Swiss franc coming down, taking out the previous low first and then onto the 0.6140. So I do still like New Zealand franc to the downside quite a bit. Next is New Zealand yen. New Zealand yen also corrected, also have a high conviction target over the next few weeks in New Zealand yen. Any continued pullback in this market is simply viewed as an opportunity to look for bearish reversals down to the next key of support to the downside, which in this case is the 74.83. So because we have those interest rate decisions in the pound pairs, New Zealand yen and New Zealand franc are actually still very high on my list for trading opportunities. Next is New Zealand Cad. New Zealand Cad took out the target to the downside last week. As you can see, we have very strong momentum in this market, and this just looks like a near-term bear flag. So it does look like it's set for further declines. And despite the fact we could see the Canadian dollar falling, it does look like it's still going to outperform the New Zealand, which is one of the weakest currencies. So any break to the downside in this market is viewed as an opportunity to look for short positions into the 0.8460. But I do prefer New Zealand yen to the downside and New Zealand franc to the downside. Next is New Zealand dollar. Now, of course, the market direction on this will be dictated by Wednesday's FOMC. You can see last week we pretty much did nothing. So any pullback in this market as it currently stands is viewed as an opportunity to look for further declines. If you wanted to be involved pre-FOMC, that would be your opportunity to go short. If you believe that the Fed is going to strike a hawkish tone and the dollar is going to rise, again, I repeat, using a wider stop loss because it can get very volatile. Or if you want a more conservative approach, see if the market corrects into Wednesday, and then if you get the sell-off from FOMC on Wednesday, you can look for the pullback and you can look for the follow-through down to the 0.6725. So again, the dollar pairs, just like the pound pairs, have to really be traded as interest rate decision trades, either before or after, and it's entirely up to you based on your own risk appetite. Sometimes I like to get involved before interest rate decisions, but personally, most often I like to wait for the move and then look for the follow through. Next is Aussie Frank. Now, Aussie Frank, we had a big bounce to the upside, but again, this looks just ripe for further declines. And we're starting to lack a little bit of momentum here, you can see on this correction. So I would not be surprised to see further declines. What I'd like to see first is some momentum come into this market, say we break out here, and then any pullback would be viewed as an opportunity to look further declines down to the lows and then onto the 0.6372. So Aussie Frank, just like New Zealand Franc, also still looking pretty good to the downside. Next is Aussie Yen. We did have a correction last week, and that was, we had the interest rate decision last week. But again, what did the Reserve Bank of Australia say? That they're going to keep their foot on the pedal of loose monetary policy. So there's still a fundamental bearish outlook on the Australian dollar, and so any correction here is simply viewed as an opportunity to look for declines. And any bearish reversal in this market, if we break with momentum, is viewed as an opportunity to start to look for short positions down to the low first and foremost, because the target is maybe even 2 weeks away here. So if you want to be conservative, down to the low, but then onto the 77.57 perhaps over the next 2 weeks. Next is Aussie Cad. Aussie Cad corrected to the upside, and it corrected more so than New Zealand Cad because the Aussie bounced harder, and that's not a surprise to us because it was ranked as being stronger than the New Zealand last week, even though it was quite weak. It is still structured to the downside, so any break to the downside, any bearish reversal would be viewed as an opportunity to look for further declines into the 0.8970. Just bear in mind, I would much rather look for pound CAD to the downside and New Zealand CAD before I looked for Aussie CAD. I don't think Aussie CAD is a fantastic market. I think there's better markets highlighted here over and above Aussie CAD. And finally, we have Aussie Dollar, which of course is based around the interest rate decision next week. We have corrected into FOMC. This happens very often. So what I'd be looking for going into next week, again, pre-FOMC trade would be to short if you believe that there is going to be a more hawkish tone because of that inflation data last week. Stop loss would be out the way just in case it does something like this and it whipsaws and then goes. But if you want to take a more conservative approach, wait for the interest rate decision. If it breaks in the direction of the trend, that would be the opportunity to look for shorts down to the low previously, but it does look like we're coming down to the 0.6933 as well. So I'm just giving you the options here of how I would personally look to trade this either before or after the interest rate decision. How you trade it, or if you trade it, is entirely up to you. And finally, we have the Euro pairs. The Euro pairs are my least favorite, but they are potential opportunities. Euro Franc has been moving to the downside. We've been short this for a while. We're really lacking momentum here. You see we're struggling at the previous highs and it looks like it's starting to roll over. So any continued break lower in Euro Franc, and I usually like to see momentum first. We get a big sell-off like this and then we start to correct. That would be viewed as a potential opportunity to look for shorts into the 1.0312. Next is Euro Yen. Now you can see that the euro versus the yen hasn't really gone anywhere, and that's because we saw a little bit of strengthening in the euro last week into this week's FOMC. So because we're quite close to the target here, what I'd really like, and it just underscores this is not as good as the other pairs we've looked at in my opinion, but if we start to come higher, any continued pullback away from the target would be a potential opportunity to look for bearish reversals. And if we break down here with momentum, we'll be looking for a correction into the 1270.31. Next is EurCad. Now we've got this listed purely because of the scoring system, but I have to say I don't think EurCad is a fantastic market because, as I said, I don't think the Canadian dollar is super bullish. I think it's more telling you that it's not the best short as opposed to being a good buy. So it does look like we're set for further declines in EurCad. Any pullback should be considered on balance as an opportunity to look for bearish reversals down to, first of all, the previous lows down here, and then on to the 1.4057. Again, this is right down on my list. It only just makes the list, and I would much rather look for something like New Zealand Franc, New Zealand Yen, Pound Franc, Pound Yen, and also even Aussie Franc and Aussie Yen over the next week or two. And finally, we have Euro Dollar. This is, of course, a market which is going to be probably the most affected by FOMC next week. And you can see we've been correcting over the last couple of weeks into FOMC. So any continued pullback would be an opportunity to look for short setups. Again, pre-FOMC would be with a wider stop if you want to take that risk. If you don't want to take that risk, then look for a reversal in the direction of the trend. And as the market corrects, that would be the opportunity that I would be looking for to short this into the 1.1146. And finally then, wrapping up the video with stocks, gold, silver and Bitcoin. Starting with the SPX. Now, over the course of November, I was warning you guys that it looked like we were coming in the top in stocks and we were due a correction. We did get that correction, and I was urging you guys to have some hedges in place for this. And last week, right down at the bottom, when it seemed like, especially on Twitter, everybody was panicking, and it does seem like everybody likes to pile on the fear when we get a sell-off in stocks. But I did say to you guys, despite all the panic, it did look like this was the time to unwind those short positions because there was a greater risk of upside and a bounce to the upside last week. And we did have exactly that. I even said to you before last week, I've unwound my short positions and we rallied to the upside. Now going into this week, we've already discussed the fact we have FOMC and the fact that the Fed may be pressured into a more hawkish tone based on last week's inflation data. And when you look at the stock market itself, you can see we had the sell-off, we had the bounce, and we really haven't gone anywhere since back on the 8th of November. We're sitting right at a place in the stock market where we could go either way. And I don't think this is a coincidence. This happens quite a lot in markets when you have big interest rate decisions or big market moving events taking place. Now, all of the stock markets we can look at here are still bearish, technically as they were last week. And in my opinion, we have to consider these technically neutral. There is no clear direction in the technicals of the stock markets heading into FOMC next week. So my outlook on stocks is purely going to be based around FOMC. I would not get involved with going long or shorting the indices themselves before FOMC. Even if you think the Fed is going to strike a hawkish tone and we're going to see stocks selling off, I personally wouldn't want to get involved in the indices before that. And in terms of running a long short portfolio, I would either want to be really completely flat, or once again, I would look to get some hedged positions in, some long short positions in before FOMC, just in case the Fed comes out very hawkish and we see stocks selling off. So to summarize, I do think we need to be patient with stocks going into next week, and I think we need to see that FOMC decision first. If we do get the Fed coming out hawkish and we start to break lower in the S&P 500, I would be looking down towards the next key of support in this market at 4476.44. In the Nasdaq, we have exactly the same setup. Price has bounced, although it's still technically bearish. If the Fed comes out and strikes a hawkish tone, I would be looking for further declines down to the 15499.26. In the Dow Jones, you can see we had a big bounce to the upside last week, but again, this failed to reverse the technicals. It's actually still, technically speaking, structured to the downside. So I go into next week neutral on the Dow Jones, and if we get a hawkish Fed, I would expect to see further declines in this market, and we could be coming all the way down to 33769.09. The Russell, we also had a bounce to the upside, although not extremely convincing. And again, I'm neutral going into the Fed meeting. However, if we do get a hawkish Fed, I would expect to see further declines to the downside in the Russell, and the next stop to the downside is the 2107.08. And finally then, to wrap up, is the Nifty. The Nifty has started to break higher, although it's not an extremely convincing break higher, because you can see the previous high over here is not with momentum. However, on balance, I am bullish on the Nifty, and the next target to the upside is the 16688.05. I think what I would like to see really in the Nifty is a continued break higher, taking out the first target, breaking above the previous high with momentum, and then I would be more inclined to look for further advances in the Nifty. So even in the Nifty, patience may be required next week. It is bullish, but it's not extremely bullish. And the best time to get involved with stocks is when we have a clear bullish market. Finishing off then with gold, silver and Bitcoin. Now, gold and silver are very interesting markets going into next week. I have mentioned to those of you who follow this video regularly that when you have an FOMC decision, for example, if you have an outlook on the dollar, say for example you think the Fed is going to be hawkish and therefore you're going to see the dollar rising to the upside, gold and silver can be good markets to trade because they don't get as whipsawy, as volatile as the currencies can get on FOMC. So gold and silver, if you want to position into a market, say for dollar strength next week, if that's what you believe, gold and silver would allow you to play any dollar rally to the upside at the same time as removing some of the big whipsaw volatility you get from the currencies. For example, if the Fed were to come out and not be as hawkish as some traders think, you could see a bigger sell-off in the dollar, whereas gold may not actually rally so much. So you will get a reaction from FOMC, but it tends to be less volatile than the currency pairs. So going into next week, I would treat this simply as an FOMC interest rate decision, just like the other currencies. Any pullback in this market, since it's structured to the downside, would be an opportunity to go short down to the 1745.60. And if you want to be conservative and take less risk, you can wait for FOMC, and if it breaks lower and you start to get a reversal, you can look for the pullback and then look for the follow through afterwards down towards the target. Next is silver. Silver, very similar to gold, and you can see we already have a near-term bear flag setting up in silver. Any pullback in silver would be viewed in line with FOMC and the US dollar, and it would be viewed as an opportunity to look for short positions. And again, if you want to be more conservative, look for the correction and then the break in the direction on FOMC. And if you get that kind of a setup, that would present the opportunity to look for further shorts into the 21.52. And last but not least, we have Bitcoin. Bitcoin is a market that I have been bearish on in recent videos, and we had a really big sell-off to the downside. We were looking further declines. We came down, took out the previous target. And ever since that, we've just corrected. And I mean, this is just the market taking a brief pause before what it looks like further declines, especially when you have this much momentum. So any continued pullback in Bitcoin is currently viewed as an opportunity to look for bearish reversals, and we've kind of already started to do that here, in fact, with somewhat of a head and shoulders over here. So any pullback is viewed as an opportunity to look further declines into the 39,630. So that is it for me for this week, guys. A huge week going into next week with 4 interest rate decisions, and even in the non-interest rate decision currencies like Australia, like New Zealand, we have GDP data, we have employment data. So next week, absolutely not a week to be taking huge amounts of risk, not a week to be taking trades with very tight stops. And for those of you looking to trade the markets next week, that is my plan, and that is the best outlook that I have to navigate these what could well be very volatile markets next week. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.